In this video, we're going to take a look at when you should think about moving your stop loss in a profitable trade. I'm David Jones, and in this week's trading strategy video with Trading 212, I thought we'd take maybe a slightly different approach than we've looked at in recent weeks. We've had maybe something of a negative tone to the videos where we've been looking at the mistakes people make, all the different mistakes people make, going against the trend, not placing stop losses, that sort of thing. So I thought this week we'll have a look at a positive one where a trade has happily started moving in your favour. But I think a big question and a common mistake is maybe when to move that stop loss. So let's take a look at this. Let's start off walking through a trade right from the beginning where we place a stop loss and it starts to move in our favour. So here's our ever popular theoretical market. The market has sold off, but we've seen the market maybe start to turn around. We decide it's going to go higher. So we decide to buy in here. And for the purposes of this example, I'll assume the rate is 130. So there we have it. The recent low down here was, and again for this example, 129.75. So it was 25 points away from where the market is currently. So we decide to give the trade a little bit of room and set our stop loss at 129.60. So we've bought at 130, we've got a stop loss at 129.60, we've got 40 points risk, and we might think, well, the market is going to go all the way back up to this level here. So from a risk reward point of view, that makes sense. So far, this doesn't look like a ridiculous trade to do. This looks like quite a sensible thing to do. But let's see what happens next. So our market has moved a little bit higher, and we'll assume that it's now trading at 130.20. We're very excited because we're now in profit. So we think, well, what can I do? I've made 20 points on the trade so far. I think there's an awful lot still to come, but I'm worried about giving back that profit. So what I'm going to do, I'm going to move my stop loss from 129.60 up to 130. So I'm going to move it to where I got in the trade. So this gives me a risk-free trade. This is not the right thing to do. So saying that's the wrong thing to do is a pretty bold statement, but let's look at the maths here. When you first put the trade on, you were happy to risk losing 40 points. As soon as the market goes a few points in your favour, in this example, 20 points, there's almost panic where you think, I don't want to give back those few points of profit that I've made, so I'm going to move my stop loss. But you know that probably is moving it too quickly. Let's take a look at a different approach. We should all know that markets don't move in a straight line, so it's completely likely the market, after being to 130.20, decides to sell off a little bit, take you out at 130 at break even, turn around and go in exactly the direction you first thought. So here's, I think, the important lesson of not being too keen to move your stop loss too early in the trade. Let's take a couple of steps back here. When we first put the trade on, we were buying at 130 with a stop at 129.60. So we were happy to risk 40 points to hopefully try and make some multiple of 40 points, whether that was 80 points, 100 points, 120. So moving the stop loss as soon as the market has moved just 20 points in our favour is a sign, I think, of nervous trading for many of us. So one approach, and there's no hard and fast way of doing this, but one approach, if we're happy to risk 40 points in the first place, why don't we wait for the market to move 40 points in our favour to, in this example, 130.40 before we move the stop loss to the break even. This way, at least, the market's moved further in our favour. We do have a trend developing and we've maybe got a better chance of the trade working out rather than it turning around and taking us out at the break even point. So there we have it. Give a bit more thought and give the trade a little bit more leeway to work out. Now, I don't think everyone is going to agree with this, but I think something that we can all agree on is that moving your stop loss too early is counterproductive. So whether you wait for it to move the distance of your initial stop or some multiple of that, maybe 1.5 times your initial stop, is a more calm, disciplined approach to trading, and it avoids the frustration of being stopped out, okay, for no loss, but on trades where it did continue to go in your favour. Because to come back to mistakes, so that the big mistake that most traders make is their losses end up being much bigger than their profits. So when we have a trade that looks like it's going in the right direction, we need to give that trade time to develop. And that means not snatching at the profit too quickly and not moving out stop loss to break even as soon as the market's going in our favour. We'll wrap things up there for this week. Any comments or questions, or maybe a different approach based on what we discussed today, just leave us a message in those comments down below. If you like the video, click the thumbs up, and we produce trading videos on a regular basis throughout the week. So to make sure that you never miss out, if you click that button there, you'll get subscribed and automatically notified when the next video goes up. But for Trading 2 on 2 and me, David Jones, we'll leave it there for this week, and I hope you have a good trading week.